Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's top stock picks. My pick is Cadence Design Systems, CDNS. Going right to the price chart, you can see we've got a big breakout going on here in Cadence Design Systems. Found strong support again at $230 in September, and we've just seen 3 days of launch here, Friday, Monday, and today, Tuesday, getting to new all-time highs above 250. And so Cadence does electronic design automation, sometimes called EDA, or systems design enablement, SDE, for the chip manufacturers. One of their biggest customers is NVIDIA. Let's go to the NVIDIA price chart just so we can see, Cadence is following NVIDIA in terms of the gold rush in AI and GPU chip development. But the price charts are also following each other. So I've been saying for a while, ever since NVIDIA broke up here above $400, that it was not going to fill this gap back down to 300. No chance. And look at, it can't even dip into the 300s. So here's NVIDIA looking strong. And so that's why Cadence is strong too. So I just did NVIDIA as your bull of the day on Monday, October 9th. So you can take a look at that just to understand, why the sales growth is ramping. I'm a big NVIDIA bull, and it even surprised me how quickly they're getting to 100 billion in sales. Like they could do 100 billion in sales next year. The estimates are already up to 80 billion. And so it's coming very fast. And that's why I said, in June that we could be looking at a $2 trillion valuation for NVIDIA. So we're understanding the importance of Cadence and why you buy Cadence in the context of NVIDIA. In my Bull of the Day article from Monday, October 9th on NVIDIA, you can find this video about DGX, the workhorse of AI that will drive NVIDIA to 2 trillion, to understand this moonshot to 100 billion in sales. So my most recent piece on Cadence, which I own both of them for my Taser, I did it. So it's a Zacks number 2 rank right now. Well, let's look at some of the metrics first, and I'll show you that. So we're looking at a 67 billion market cap. Now it is rich on a price to sales basis. So we're not talking about a cheap stock, but Cadence is basically a duopoly with Synopsys, because they both do SDE and EDA for the chip manufacturers. The reason Jensen Huang loves Cadence is because Cadence is all about simulation. And Jensen Huang wants to simulate everything before he sends any chip designs to the foundry, whether it's Taiwan Semi or Samsung, for anything to be fabricated. They simulate everything first. And this is so important, what Cadence does, because we've gone, sub 5 nanometer. They're making chips 4 nanometers, 3 nanometers. The space between the transistors, incredibly small, 10 times smaller than the coronavirus. So that's why being able to simulate this in a 5th generation CAD CAM to design chips is so important. So looking at the sales growth here, we're just barely double digits. But again, Cadence is a key partner of NVIDIA, and there's only one other company even close to Cadence, and that's Synopsys. So they basically run a duopoly, and that's why they can trade at these richer valuations, 15 times sales. Let's take a look at the estimates here. So 19% EPS growth here for Cadence to 509, looking at 13% growth next year. And, estimates just creeping higher, but for some reason, somebody loves the stock here and buying this breakout above 250 and pushing it there. So here was my July article, Bull of the Day on Cadence. If you want to learn more about it, just search Cadence. If you just go in the search bar here on Zacks.com, if you just type the stock symbol CDNS, you might see a Bull of the Day article, but it might be an older one from March. But if you put CDNS and then the word bull, you'll find this most recent one from July, where I explain what Cadence does in SDE and EDA for the chip manufacturers and why simulation is so important. So, so look at NVIDIA just keeps pushing higher here. So let's talk about targets for Cadence. On this breakout, I mean, we're easily going to get to 275. And you do have some higher price targets above 300 from some folks on the street. I think you could see that in my article. So, I think you can definitely nibble here at 250 and look for a sustained move higher as long as NVIDIA is moving higher. All right, that's it for Cadence. All right, thanks for joining me to learn more about Cadence, the little partner of NVIDIA. And next up is Brian Hayes with his top pick for this week.
Thanks, Kevin. Brian Hayes here with our other top stock pick. I have another exciting stock for you, so let's jump right in. My top stock pick this week is a specialty real estate investment trust that was founded as a multi-tenant data center provider. The company focuses on providing a competitive advantage across clouds, networking, storage, and software. The company I'm referring to is Equinix, ticker symbol EQIX. Equinix operates nearly 250 data centers in 71 global markets across 32 countries. Its business is based on a recurring revenue model in which customers are billed at fixed rates through the life of the respective contracts, generally ranging from 1 to 3 years. Equinix's global data center portfolio is well positioned to benefit from the high demand for interconnected data center space on the back of rising enterprise cloud adoption and customers' digital demand. That's a bit about the company's background and services. Let's shift gears a bit and take a look at Equinix's industry group. Digging a bit deeper here, Equinix is part of the Zacks REIT and Equity Trust retail industry, which is currently ranked in the top 20% out of approximately 250 industries. Because it is ranked in the top half of all Zacks ranked industries, we expect this group to outperform the market over the next 3 to 6 months. Quantitative research studies suggest about half of a stock's future price appreciation is due to its industry grouping. In fact, the top half of all Zacks ranked industries outperforms the bottom half by a factor of more than 2 to 1. So by targeting stocks contained within leading industry groups, we can dramatically improve our odds of success. And also note that this group is relatively undervalued based on the forward price to earnings ratio, as we can see here. Moving to our snapshot page, we can see that Equinix is a Zacks ranked number 1 strong buy. The data center REIT has established a healthy track record of beating earnings estimates. Equinix has delivered a 6.75% average surprise over funds from operations figures during the last 4 quarters. So they've been consistently beating estimates, and the REIT's price is reflecting this. Equinix is outperforming its industry group this year. And we can see that analysts covering the company are in agreement and have been raising estimates across the board. Estimates for the current fiscal year have risen 11.29% over the past 60 days. The Zacks consensus estimate now stands at $31.94 a share, reflecting potential growth of roughly 8% relative to last year. Revenues for the year are projected to climb 13% to $8.21 billion. These are exactly the type of trends we want to look for when narrowing down our list of potential stocks. So Equinix, ticker symbol EQIX, is my top pick of the week. The company is the market leader in the data center REIT space, and I see more upside ahead for this company given the bullish artificial intelligence theme. From Kevin and I and everyone here at Zacks, thank you for watching. Make sure to tune in next week for more of our top stock picks.